Welcome to Junior Mining Talks and thank you for watching. Today, Luke and I are talking to Brent Cook about speculating on discovery stories, both pre and post discovery. And we'll have a look at a couple of examples, historic and current ones, actually, hopefully. But of course, not before I've warned everyone listening that although none of the companies mentioned or featured in this publication have paid us to talk about them, this channel earns its money by charging junior mining companies for interviews. This means that there is a high probability that some or all of the companies that we will cover in here have paid us in the past or might pay us in the future to conduct such an interview. In addition, all of us are active junior mining speculators, which means we may own shares of companies mentioned in here, or we may have owned shares of them in the past, or we may own them in the future. Please read the disclaimers on your screen right now. And if you're new to this space, please go to the last portion of this video and listen to that warning first, because your capital is at risk. This is a very, very risky sector. But that all said, Brent, I'm almost going to be shutting up now. Thank you for being here, of course, but I'm rushing to talk to you, rushing to this first question, which is related to a presentation you gave recently, which you've highlighted that the odds of making a discovery are essentially very, very low. You say 1 in 1,000. I don't know if that's just a kind of a rule of thumb that you're using or actual data. Feel free to talk to me about that. But what my first thought here was kind of like, should I even bother with speculating on pre-discovery companies? Because to me, it is kind of it's just that psychologically, pre-discovery companies are cheap, and that kind of does something to me, I suppose, and that's the lack of experience in me showing potentially. But so is it better to speculate on pre-discovery companies, or is it better to wait until the initial results have confirmed that there's something worthwhile, even if that means paying multiples for the stock? What do you make of it?
Well, they're two different strategies, and I think both of them can work. With a pre-discovery, you need to really have a handle on what the company is looking at for, what their experience is, if they're competent in that sort of deposit, and what they need to find to be successful. And that's got to be based on what you're seeing in the soil samples, in the geophysics, in the geology. So you have to have a model in your head of what needs to be seen in order to go to the next stage of drilling. So I think that's, that takes a lot more, I guess, research per se, but the rewards are enormous.
Yeah.
Um, Post discovery, again, it comes down to much the same thing, but now you've got to start looking at metallurgy, location, um, infrastructure, et cetera, et cetera. Those things come more important. And again, if the drilling starts to show this thing's dying off, which is most often the case, you need to see that and get out in time before it drops down. I mean, I've made, I don't know, a good deal of my money on stocks that ran up, recognizing the fatal flaw, if you will, and having them drop off after I sold.
There's a couple of things that we're definitely going to be touching upon. Hopefully, the pre-discovery thing toward the second part of the conversation. But essentially, where do you see because you say they are two different strategies? Is one better than the other, or is it more personal and related to the amount of work you want to do, or the type of skills you have? And how do I know which one's right for me?
Those are all the right answers right there. Is it, what's your skill set? How much time you're going to put into it? What are you looking for? And, more often than not, unless you're a geologist or a mining engineer or something like that, you really need some sort of help in both pre and post discovery. I don't think you need it, but it certainly helps to have someone you can talk to or read or whatever, who can tell you, there's a bunch of arsenic here. We got a problem. Or the gold is silica encapsulated. We got a problem. Or the continuity here is fantastic. This looks really good. You need to have some basis to make a decision. And this is really no different than, I don't know, biomedical research, cancer research, or whatever. I don't know enough about that to get into it. I would really need someone to, guide me, if you will.
Hmm. It almost sounds like you have a newsletter for sale. Um,
That would be Joe Mazunder's Exploration Insights, yes. And it is the best one out there, in my opinion.
what I want to go the route of post discovery here for a second to in an effort to try and pretend that I know what I'm talking about. But what is a discovery that's worth jumping on after it's got that initial spike in the share price? Like you follow the company, maybe it was 5 million market cap. They drill something, it's very good. Market cap jumps a couple of times. It's now 15, 20, 25. What am I looking for in that first news release from the geology perspective?
Well, let me give you an example. I got a bunch, but one of them is Mariana Resources. They're in Turkey. Um, they drilled a really fantastic hole. I forget how many, 50 to 100 meters of real high copper, gold, silver values. Um, I saw that hole. The stock doubled, but my concern was, did they drill right down the structure? So I waited until they came in with the second scissor hole, if you will, and confirmed that there was some width to it. So I jumped in after it already more than doubled. But in the end, we ended up making 8, 10 times our money on that one because we recognized there was continuity, there was size, there was strike to it, location was okay, that sort of thing. So I don't know if that answers your question, but I think that's where we waited after what you might call the discovery hole
Mhm.
to confirm that it is legitimate. I mean, one hole doesn't make it a deposit or necessarily a discovery. You need to confirm that there's actually some size and grade to it.
Yeah, I was in that discovery too. I bought after the first hole, and how do you deal with concerns? Because you always, when there's a new discovery, within a day, you also hear concerns from all kinds of directions. I heard a story about a twin hole that Anglo drilled a couple of holes there, and they were just twinning it. I heard a story about a church. I heard stories about people being against mining over there. So, I mean, this is Mariana, but you almost always you hear within a day or two people having concerns. Are you calling around asking for intel, or how do you deal with that?
Um, all of that, all of the above. You need, I get, it's a high risk business, and I think you need to get a sense of who the people are. Give them a call. They're usually, ready to talk to somebody. Look at the geology. If you can talk to the geologist, or if I can talk to the geologist, that's better. Send some emails back and show me some pictures of what this stuff looks like, that sort of thing. With, an interesting thing about Mariana, um, there was a soil sample program across this, and the soil sample, the high grade copper in the soils that they found was actually transported from a mine the Russians did back in the 20s, and there was some slag down in the valley, so that sample was transported. It wasn't in place. But the Turkish geologists running that didn't recognize that and drilled it and made the discovery. So based on what I knew about the project, I wouldn't have bought it because I knew the sample was illegitimate. And they made discoveries. There's always a bit of luck in a discovery. There's a lot of everything else, but some luck always helps, I think.
And what about people? I mean, in this case, Eric Roth was in the team. I think he is a credible geologist for many, many years before the discovery already, and that probably gives you some confidence that it's not full play or something. But still, if you would see the same discovery and you wouldn't know anyone, all the names are new to you, and you cannot really find out much. Would that keep you away?
Yes. Yeah, if I not necessarily I don't know the people, but if I know the people and I know their history and it's not stellar, they've been in a bunch of other junior companies that were basically scams, or at least put out misinformation or misleading information. I wouldn't touch it. And there are some that, I know the people, I'm not happy with it, I don't like the geology, whatever that I miss, and that's the way it goes. The key in this really high-risk sector is, number one, don't lose money. There's always another train coming by or whatever, another pitch coming. There's no called strikes per se.
I think I have a question about the team, but that relates better to another question that I have here. I want to go back to talking about what you notice first before you actually get to the team, though, because you essentially said it's grade and width. I think like on the first pass look when assays come in, I'm looking for grade, width, and depth. Different depths, different grades that work. What happens after that, though? That's kind of the first unanswered question that you're looking for the discovery. Is it large enough? Does it have the grade? Is it close enough to surface? What is the second thing? I mean, there's a couple of things that pop to mind for me, but I don't know how to classify them necessarily, like geometry, continuity, structure, metallurgy, and so on and so forth. So what's the second thing, the second unanswered question that you're looking for?
And then I asked how much money they've got to see if they're going to be financing. Most of these companies, if their share price racks up, they're going to be looking for financing unless they've got plenty in the bank. But and they'll be approached by a number of firms to raise money. So I'd look at that and see how much money they need, and how much dilutions we're going to be looking at if they do raise money. I mean, if you're looking at a $4 million market cap company that slaps into something and the price goes to the share price, the market cap goes to 15 million, they want to raise another 10 million, you're looking at a 30% dilution. That's a lot. So I look at that as well. But again, it comes back to the people, the area. I want to see good continuity in grade. The more erratic or nugget it is in a gold deposit, the more difficult it is. If it's a steep, deep vein, like a number of companies in Canada and such are drilling 500, 800,000 meters down after a vein that's probably, varies from 5 to 2 meters wide. Each one of those drill holes is going to be very expensive. And if it's a nuggety deposit, your drilling has got to be very tight. You're not going to get a resource at anything under, call it 25-meter spacings, right? So that's a hell of a lot of money to drill that out.
In examples like Rupert or Reunion, you had these really wide intercepts, which probably makes it easier for the less informed speculator to make a bet. But if you look at Great Bear or maybe Newfound Gold, where you have maybe Virginia, where you have 10 meters or 5 meters of high grade, do you need to wait longer to see a couple of holes confirming it? Or would that still, I mean, how would you interpret that? If you have 3 or 4 holes in a area of 100 meters, but it's just 5 meters of 15 grams, and it's a $10 million company, and can you really find out at that point already this is something, or could it just be a lucky strike and you wait a bit longer?
Well, I'll admit I missed Great Bear, and that's because over the decades I've been doing this, I grew prejudiced towards deposits in that area, as most of them are erratic, and you have a lot of dilution when you mine those things. And so I missed Great Bear, and that was due to a prejudice that I had before. With Rupert, that was the first drill holes. You had long intervals of consistent mineralization from 0.5 gram to 5 grams, but it just kept consistent. And if you can see consistent grade, you've got a large deposit, or probably have a large deposit, and you've got something that hangs together and it'll be easier to mine than a erratically mineralized body. Does that make sense?
Yeah, especially in the success stories, when you look back, and I've missed many things as well, then you think, why didn't I act on this, like Rupert or Reunion or Snowline? But for example, right now we have A-Mark with a couple of very big holes over 150, 200 meters. And also here, I mean, the discovery was announced a week ago. There are some concerns. You see that, for example, at a certain depth, the mineralization stops completely. So people say, hey, it may not be deeply rooted. You see some holes on the western side, I think, that are getting thinner. So we are talking about an example where there's not a lot of information yet, I think. There's like 10 holes or something. And when you're in it, it's way more difficult than a year from now to conclude good or bad. I mean, can you take this example and say like, yes, those concerns are legitimate, be careful, or what's your feel about it?
No, I think you're spot on there. I mean, I've looked at that as well. There's two lines, some really nice consistent grade in those holes. It goes to what 150 meters and kind of dies off rapidly as they get into the intrusive, the granitic body, if you will. That's a concern. Like, where's this mineralization coming from? If you look, I kind of have in mind that, well, maybe it's a body like this and it's running down the side, or it's coming from this direction, hitting a favorable volcanic bed and spreading out. Now, I look at that now, and this is a really, some really good holes. They show good continuity. The stock has more than doubled. They're going to end up with 30%, but there's a big expenditure by Freeport, I think $100 million to earn that 70%. So they're carried. But the next batch of holes are going to be much further. They're going to be chasing the chargeability anomaly off to the north and south. If those holes come in, like the ones they just drilled, that stock's a buy. I would jump on it right away. But if they come back with your usual mineralization in the Tutagon area, which is 0.2, 0.3 copper, 0.2, 0.3 gold, it's the stock's going down. And historically, the Tutagon area, which is where they are, is known for its low-grade porphyry coppers with not much gold. This one's unusual. It's got gold. So, I mean, that's how I'm looking at it right now.
I hear you two complaining about having missed things, wherein that's kind of a luxury to me because I'm not even yet at the point where I can worry about missing things because I'm still at the point where I have to worry about being in the wrong things at too high of a price, which is what I mostly have experience with, unfortunately. But Brent, how can I recognize in the geology that a discovery is trading at a too high of a market cap and where I'm going to stay away from it, or maybe I'm going to sell if I bought before the jump or after. Like, how do I know a discovery is too expensive? Essentially, is what I'm asking.
Well, that's a really tough question to answer. I mean, that is, each project is unique in a way. I think you've got to value it based on, I guess, the market, obviously the market cap. You look at something like Southern Cross Gold in Victoria, Australia. That is a fantastic deposit. It's going to grow, but their market cap is in the order of 800 million Canadian. But that sort of deposit is very unique. And it's the sort of thing that a major mining company, I think, is going to come in and buy. So despite the high valuation, I think that's going to be eventually bought out for a higher price because I can see continuity is fantastic. The grade is great. There's parallel structures on trend. They're just starting to hit that are showing the same style of mineralization. So that one, although market cap's high, I think it's still worth buying because of what I think is coming and recognizing that most major mining companies are desperate for tier one assets. And I would throw Rupert in that as well. That's a fantastic deposit in a great location, infrastructure, et cetera. So I think, that's, maybe it's pretty high priced. Quality will always sell, I think.
Well, I think Luke is happy to hear about that part about Rupert. He's been making me hot on it for what, a year plus now. How do you know, or how do you deal with risk reward here at that point though? Because buying into, even if it's post discovery, this is still mineral exploration development that we're talking about. One of the riskiest places to deploy capital on the market and probably within venture capital too. How do you know that it's worth the risk? Because how many companies have sold for, let's say you're saying it's 800 million, and for it to do a 5x. Now you're going to make me do math off the top of my head. $4 billion. How many deposits have sold for $4 billion, and how do you weigh that risk reward?
Well, okay, let's go back to Southern Cross. I don't see that going for 4x, but I see that going, I could see $1.5 billion coming into that. What did Great Bear sell for? That was over $1 billion. They didn't have a resource. Again, it's quality. It's tier one assets. It's low margin assets in good locations. Eventually, someone, I think, is going to buy that.
But is
That's
2x
what I'm
really
basing.
is 2x really worth your risk? Is what I'm asking. Is like, is it a sustainable strategy to go for a 2x when you are in pre-revenue venture capital geology related businesses?
I am, whatever that's worth. I mean, I'm playing. I own some $10 million stocks that are just exploring, and I own Rupert and Southern Cross because I think they are so unique that someone else is going to buy them. So I'm happy with a double on those.
How much of that is dependent on management from that point on? Because it almost sounds to me like maybe at that point you're playing more the management game than the geology game, although geology is still important at that point. And this might be actually a good point to talk about it in general, but how much of a stock's success depends on management versus geology?
No, that's a good point. I mean, the geology is great, but whoever's managing it has to be able to recognize the value or extract the value out of it and know how to do that. They can't have this, 5 billion market cap idea and not negotiate. It's a negotiation process, and you need to have smart people in there doing that. People that have done that before. A 5-year experienced geologist is not the guy or gal to be negotiating with Kinross or Newmont. You need someone in there, and so you look at the board. Who's on the board? What's their experience? Are they capable and competent and experienced in dealing with actual transactions?
Is it? I mean, is it just in terms of discoveries? If you look at the big names, I mean, in nickel, Mark Creasy was involved in Sirius, Great Bear Discovery Group, Rupert, Harry Dobson, Reunion, David Fennell. Is it? I cannot even think of big discoveries over the last couple of years where there was not some sort of big name involved as a shareholder or as a management board of directors type team. So would you even bet on pre-discovery names where there is no sort of big name involved, someone with connections and or wealth?
Yes. Look at Snowline. Scott, what's his name? Scott Bergen. Anyway, great guy,
Yep.
great kid. Nobody knew of him, but he's intelligent, experienced, been working that part of the world forever, and made an incredible discovery. Everyone has to make their first discovery before they can make their second, right? So yeah, I would trust something like that.
Yeah, and even in those cases, you see typically some early backing from wealthy individuals. But Snowline, I think, was only Crescat, I guess, as I remember, in terms of
Yeah.
having a bit of a name behind it.
Mhm.
All right.
Actually, that's a good point. Follow Quentin Henning. He's had, in my view, a number of technical successes in grassroots exploration and some real life successes as well. It's a tough game, but I would listen to what he says and then take it with a grain of salt and do your own due diligence.
In terms of discoveries being on its own and discoveries having, I mean, I noticed that quite a number of discoveries have a borderline drawn on top of them, like Rupert and Orion. Well, Rupert has a discovery. Orion is right next to the border. If you look at G2 and Reunion, I mean, they share a discovery right now with the A mark. They may share it with TDG next door. I mean, is that a bit of a coincidence? And how do you deal with it? Do you invest in area plays or things that are very close to existing discoveries?
Well, it's funny you should mention it. I own both Rupert and Orion, and I own G Mining and G2 because I think there's a combination there that makes a lot of sense in terms of your capex. If they join those up, your capex for the whole project is down a lot. So I think that's a good point. In regards to the company next to AMark, I think that's a bit of a stretch right now. I know the stock really jumped, but they're quite a ways away, and we don't know how big this is going to be, nor do we know if everything else is going to go back to the typical Tutagon grades.
So are you against playing I mean, especially in early stage discoveries, jumping onto something next door is not something that you would do typically?
If the geology goes there, I would at the right price. Another one, what is it? Elementum. They've got that project in Serbia. They're on trend from Timok and Bor.
Yeah, it's Electrum.
Sorry, Electrum, you're right.
That's it.
That's pretty interesting. And it's pretty cheap. And they've got some good surface values, and they just got some money and help from BHP. That's a wild swing, but it's interesting.
Yeah. Well, that's one of these. I think they're expecting results to come in. That's one of the pre-discovery stories. So we can definitely talk about pre-discovery. Fair disclaimer, non-honest confession. I should be considered biased here because I do own a little bit of Eli. What are some examples of bad outcomes on the post-discovery spectrum, though, and when is a good time to exit? When I say bad outcomes, and why I'm asking kind of two questions at the same time is because I'm thinking you can be in the right discovery, buy it at the right price, and then still take a round trip where, the stock pops. It was good rocks, but for whatever reason, management, timing, market, whatever, it didn't work out. So yeah, talk to me about selling. When do you know that it's time to sell? Is it price? Is it geology related? How do you exit these things?
Again, it's company by company thing. The Lassonde curve, which is exploration, discovery, technical studies, financing, and finally it may come up when it gets into mining. That's a real thing, and it never hurts when you've made good money on an early discovery to at least take some off the table. I start looking at metallurgy. I start looking at infrastructure, CapEx. And unless I see something that I think is good enough that a major is going to buy it or someone's going to buy it, I'll get out of it, regardless of what the PEA or pre-feas says, that sort of thing. Because once you get into the mode of the technical studies, the engineering, you're raising a lot of money, you're not putting out any news, and you're going to have to build it maybe. And I do not want to build a mine.
Do you have any examples? Is kind of where I was heading with this. I think I saw that presentation that you gave in Vancouver. I'm not sure if there was any examples in there, but any examples of companies that didn't work out and when a good time would have been to exit.
Well, Newfound Gold comes to mind. That stock went from, sub $1 up to, I think it got up to $9 or $10. And now it's back down to, it's down quite a bit. You'd know more than me, but again, there you could see that, and I didn't buy it, but it really ramped up based on a lot of high grade drill intercepts. But as you look at it more and more, it's an extremely complex deposit with fractures and shears, and it's difficult for me to put it all together. I would have got out much before that. Another one was Novo Gold with their stuff in Australia. That thing went from sub $1 to $10 based on the concept that they were looking at a Witwatersrand style deposit and the potential for, 10 plus million ounces. What I saw before I went there and when I went there was the horizon, mineralized horizon, went under a volcanic unit. So the strip got really big, really fast. And the key to this thing working would have been not just the flakes. Remember, it had the little gold flakes, but some very fine to invisible or no, invisible gold along with it. It turned out that there was only those nuggets. And that's when I sold it. I realized there's nothing else. It's just those nuggets, and this thing dips into the hillside, and the strip's going to kill it. So that would have been the time to sell.
What about jurisdiction? Euro Sun has a very big deposit in Europe, Rovina Valley, or Bello Sun has Volta Grande. Are you looking at jurisdiction very early on already, or is that later in the game when the discovery is advancing?
Oh, definitely look at the jurisdictions to start with. And, I can miss stuff that way. I know of a project in Colombia I looked at, and it set in a very lovely location outside of Medellin, summer homes and that sort of thing, and nice, beautiful white church set up on the hill. And it's like, no, most people didn't know that, and the stock did pretty well. But in the end, that's going to work, and it didn't. So you got to see those things too.
I wish I'd known you back then with Novo, because that's when I got burned on, and badly too. That's actually a good point to talk about. Maybe go back to talking about management versus the rocks, because that's also something that, and I've noticed over time, and I'm still working toward improving it. But I can be naive when it comes down to people. I like to like people, which probably explains why Luke and I have been talking for so long. But jokes aside, it's Luke's a great guy, of course. But I like to like people, and so I like to be sold on a dream, if you know what I'm talking about. So I like to see those high grades, and then a charismatic person involved in the story tells me about it. Somehow I like the guy. Being naive, and you put your money in there, and as the stock starts falling, you don't doubt your thesis. And so this might be a good point to talk about. Constantly check your thesis, constantly be checking the rocks, no matter if they're your friends, because I think with Novo, some of your friends were involved in it, right? And but you still sold, you still made money, or didn't lose as much, or whatever it might have been. So that's also a good point, I guess. I don't really have a question.
No, I think that's an interesting point. Up until 1997, I was a consulting geologist, and I went all over the world evaluating projects for usually major companies, some junior companies. And, the people you deal with in the field on the whole are honest, hardworking geologists. And then I joined Rick Earl in 97 and started to go to Vancouver and go to these conferences and this sort of thing. And it was surprising to me. I was kind of naive, obviously, but these promoters, these people, they'll lie to you. Flat out. They'll tell you things, and knowing what I know about the geology or whatever for the project, it's a lie, or at least they're misleading information. So that took a while to come to terms with. And I think that's where you're going as well, is, when a company starts, they promote something and they raise money on that. And then if things start going bad, it's rare that they say, our bad, nothing there, let's move on. It's usually, well, we did the geophysics and the drill hole just barely missed it, and we need more money, and it's going to look good. And, that happens too often.
My point kind of was like, the fact that you like someone doesn't mean their stock price is going to go up. And that was a bitter lesson for me. How do you know that part, though? Because rarely does a discovery happen on the first hole. Sometimes it happens when you think that a company is about to die, then they hit it because the people did actually know what they're talking about. So how do you recognize someone who's just, selling you a fat pitch, maybe lying to you, like you said, versus someone who really knows what they're doing. They just need more time to figure it out because it is maybe a complex geology or something like that.
How do you know? I guess it's gut feeling and knowing that, on what you think of the person and what's the geology telling you, what the geophysics telling you. But really, it was another one. Steve Lieb, I think his name was. Steve, I forget to say, the geologist there. Anyway, I went down to Ecuador, looked at it. They'd had a little bit of success here and there. They drilled a bunch of holes. They had enough money for one more drill hole. And he laid out to me his thesis, which was a real long shot, but I understood it. And I didn't buy the project, I didn't buy the stocks. I knew he was out of money, but I knew the concept and I trusted the geologist. So when they drilled that hole, jumped in then and it did really well.
Mm.
But again, I think it's because I knew a lot of the geology and I knew the concept. So when I saw the drill results, it verified his concept that he was right. There's something there.
Mm. Well, I hope you're better with rocks than you are with remembering people's names. Jokes aside, you're giving me a good idea for a t-shirt. Trust rocks, not people. I even wrote it down because people will lie to you. Rocks are just rocks.
Good point. I'll take a shirt.
I'll give you some royalty on it if I haven't ever ended up making it. Now you have it on video so you can claim it. How can I kind of see through, and now I kind of want to go to, because I know you have to go in some 15 minutes or so, but how can I see through someone's pitch and know if they're lying when it's pre-discovery? This is where we can go and talk about the pre-discovery. Like, are there signs early on where you see like, okay, this is just promo, all bite, all bark, no bite, and like this is a serious geologist? Is there something you see in the pitch itself, like in the presentation, the website, in anything else?
Well, that's a good point. One rule of thumb of mine is if there's a bald eagle, American flag, or the Statue of Liberty on their website, run. Also, on the website, is it well organized? I mean, if you can't figure out what's there, or if the data you need to make an assessment isn't there, or in the news releases, to me that tells you one or two things: either they're incompetent or they're hiding something. Always look at previous work that's been on a project. That should be available. They should tell you about that somewhere. Like this, these are the previous drill holes. This is what was there, but we think they missed for this reason, that sort of thing. Or are they just going back in and re-drilling the one good hole that the previous company drilled, and in the remaining 20 holes were duds or low grade? That happens a lot. And so we need to go in and reconfirm the good drill hole. Well, that's, to me, is bullshit. It wasn't the good hole that was the trouble. It's all the bad holes.
I've got another real example of a few years ago that's still very present. I remember you telling a story. I think it was one of the conferences. I was sitting in the room and you were talking about Herein metals, I think, and it must have been 2 or 3 years ago. Stock was around 18 cents, I'm pretty sure. Right now it's almost 80 cents, 75 or something. They didn't drill holes yet, I think. So 2 questions. Why did you like the team back then at 18 cents? And second is, even though they had good results, they didn't really drill a hole in the target, I think. So would you sell it after 4-bagger, even pre-discovery?
All right, well, Hannon is interesting. They moved on from the stratabound copper mineralization, the backside of Peru, out in the jungles, and they've made some porphyry copper type discoveries. And all they've done is soil sampling, some trenching, and some geophysics, and it looks really, really positive. If you see pictures of it, there's copper bleeding out of the rocks in the stream beds. So it's a really sexy story. However, as you say, it has moved up a lot. And they've paid something in the order of 125,000 for a promotional push starting, I think it was in January. So there's a couple of guys out there talking this thing up that are getting paid to talk it up. And I think that's impacted the share price as well. And it's a tight structure and it's competent people. But it's a really sexy project. Myself at this level, I'd wait and see a drill. We need to see a drill hole that comes back with at least 0.6% copper with some gold in that location. Ideally, I like to see 0.7 or better. If we get long intervals of 1%, just jump in. That makes sense?
Yeah, for sure. I think in discoveries and you often see that the stock moves up, well, in front of a miss, but also in front of a discovery. So it could sometimes be a leak, but it could also be excitement in the market, people waiting for those drill holes, which in a way is risky anyways, because high expectations and not an amazing hole is typically a pretty quick drop down again. If you see that, if you have good team or bad team, and you see a stock really go up, maybe even 3x in this case or 4x, and you still believe in the concept, would you always sell something? Or do you like concepts and early stage sampling and without a drill hole in it, enough to really keep your full position and just bet on it?
In this instance, I would sell half. If you got a 4x on a pre-drill discovery in the jungles of Peru, yeah, I'd get my money back and ride it for free. I think that makes a lot of sense. Good, because, again, going back to the odds where you started, the odds are real low of making a legitimate discovery. So it never hurts to take money off the table in these things if they've moved before there's a big news event, in my opinion.
Yeah, and in the case that you didn't own it and you see a stock go up a lot, and sometimes you see it that a stock goes from $15 million to, for example, 60, 70, 80, they hit one or two holes. So you think, okay, I missed the first 3x. It's still only one or two holes. Then it could even be riskier sometimes, I feel, because you have the drill confirmation, but if it's only one, and you have to wait 3 or 4 months before they move back in because of whatever seasonality kind of thing, which also brings uncertainties, right?
Yep. Yeah, I mean, in that instance, I would be more inclined to wait and get confirmation that there's some size to this thing. I mean, A-Mark's the classic example of that right now. It's more than doubled. There's more holes coming that are further out from the lines they did. Let's see what those look like.
In the A-Mark case, Freeport spent almost 35 million, and they told people, Freeport and A-Mark, I think, that they are expecting to invest another 75 million for the remaining 10%, which would be positive. That would value the project at 700 million already. I mean, if they are willing to spend 35 million and the next couple of holes are not amazing, would that immediately kill the complete project? Because they have already spent 35 million. People were willing to invest in it. They made the discovery, maybe a few holes miss, and then hit again. I remember myself a very different discovery, but Chalice made the discovery. It went up. Next holes were bad. I sold. Next holes were amazing, and the thing went to $10. So is one or two missing hole? I mean, is a missing hole perhaps too early to exit? Because this is potentially a big system in A-Mark's case.
Tough call again. It depends on what the geologic concept is. In A-Mark's case, they've got the big IP anomaly. And that needs to continue to show grade because you need a big deposit in that location. Small one's not going to do any good for Freeport. So if the next ones miss, and I'm talking about the ones that are stepping out hundreds of meters, I'd dump it. But that's just me.
Yeah, I'm not trying to defend it. I own it a little bit, but I'm going to defend it anyways. I mean, the TDG project has 1 million ounces. I think it's a little bit of a different epithermal system. And I think Amark has like 5-6 targets on their property, and then you have the Kemes mine. So I mean, there is a district where lots of ounces and copper pounds can be found. This discovery may already be 2 million ounces in those 10 holes that they have drilled. So don't you think that adding all those things up, even if it's limited to those 2 million ounces in this spot that they just drilled, would it still be concept out of the door and it's done? I mean, because this concept, I think in a way is positive. Almost if they would miss it right now, they probably have 2 million high grade ounces, and then they have perhaps a million next door and perhaps a million somewhere else on the project. Would that really kill the concept immediately, or would it just be also a little bit of a sentiment thing? I mean, you would know that when they now miss, the sentiment will be over for a while and just get out for sentiment reasons, or get out because fundamentally it's never going to work.
Well, I don't know how many ounces they've got. Freeport's not looking for gold, they're looking for copper. And they need something big. So one of the lessons I learned, at least that I follow, is if my concept doesn't work, sell. If I've too often in the past, my concept, my whatever you want to call it, has gone from science to hope. When I start hoping the next holes are going to be good, I've already lost the money. So hope doesn't work for me. If those next holes, I would need to see similar grades or higher copper grades or something to confirm that there's size here and that something Freeport's looking for.
Well,
yeah, no, agreed. I think it's fair point. I think I mean hoping is always a little bit of a part of it. I think because you will always be waiting for a next hole. I mean, of course, at some point with Snowline, for example, you know that maybe drilling extra holes is almost that it's only to confirm, but you know it's big enough. That's a difficult location, but it's very big. And Reunion at some point, I mean, at some point you know that it has, I guess, the critical mass. But I think in the first 1 or 2 months, you will always be hoping to a little extent because you don't know yet, right? So you always have a level of hoping as an investor or speculator.
So you're hoping now.
Well, it's not I mean, it's a medium-sized position, so I will still be able to eat. But I mean, I think about all these different, you have a bit of this speculation. Everybody jumps in, hole disappoints, everybody goes out. And in this case, I think it's, I mean, I'm not going to argue because I agree to the point that the moment things are going the wrong direction, typically they keep going in the wrong direction, which is also my experience. I would just feel like there are only 10 holes in this one. And if a couple of southern holes wouldn't hit, but the northern holes hit, then I'm not sure if it's immediately a end of concept out of the window. It's done deal, let's say. That's the only thing that I would argue.
Fair enough. Let's see what happens and
yeah.
Get back to me with what you do.
Sure.
And I mean, Brent, you're kind of taking away my only thing, which is hope, because I never learned how to drink. So that's the only thing I've got left, given that I am in junior mining. Let's talk about something more broad, because I'm not necessarily following in that conversation. And I'm not up to date like on most things. But what is too expensive for a pre-discovery company? I ask you, I suppose that same question for a post-discovery company. What's worth the risk reward? What about a pre-discovery company? I mean, you talked about Hannon or there's a couple of other names there that are sporting 20, 30, 40, $50 million, dare I say, valuations where, maybe they had one hole, but it was a duster and they're like, oh, we're going to find it on a second hole. And they still have that valuation. What's too much? Is there kind of an absolute amount where you're like, if it's above that, I'm not touching it. I'm waiting for the results.
Well, there's no absolutes in that, but I think, okay, so how much cash do they really have? How far can they go on that, what they've got in the bank? If they've got, say they've got 3 million in the bank and selling for 10 million and you like the project, that's fine. If they've got 3 million in the bank, they're selling for 30 million, it better be a really good project. And it probably isn't. That range to me is 10 to 30 million, assuming they've got some cash, is about where they should be if it's just a concept. In general, I mean, it depends, but that's kind of my thinking there. 50 million, they'd better have more than just a concept. They better have some drill holes or at least geology suggestive of a major system. Does that make sense?
Hmm.
That's kind of what I, just in general.
And in terms of types of targets, would you speculate on a VMS, which in some cases in most cases are small, but higher grade? Would you speculate on a very deep nickel target, which is 500-meter deep and there's no deposit near? Or would you just speculate on big porphyries or big gold systems? Is there a system that you just don't get involved in because you feel like it's not worth the effort?
A lot of the stuff up in Ontario and Quebec, it's different. I'm not an expert on that. I've never lived up there. I never worked up there. And everybody's got a vein that's got a drill hole with 7 grams in it and maybe a small mine on it. I rarely look at those up there because I think I'm at a disadvantage. Everybody up there knows these deposits. They know they know this old mine and that mine and this and that. So I don't really spend much time looking at that sort of thing because I don't have an advantage. I like big porphyries. I like gold, high grade gold or oxide gold at surface. Deep nickel play without any information, I wouldn't go near. I was looking at power nickel in Canada. That looks really interesting. The stock's done exceptionally well, but the guy running it now, new guy, has a really legitimate concept as to what's going on and where it's going to get bigger. I might speculate on that. VMS deposits I rarely go for unless they're gold rich. I don't know if that helps at all or answers the question.
Yeah, in the power nickel case, I mean, it is a good discovery, I think. But I think the team also has been quite promotional. They have compared it to the early days of Norilsk. Is that a red flag? Because I don't see, and I'm not a geologist, but I don't see any signs of Norilsk in this type of deposit. What do you think about those types of comparisons?
I agree with you. I don't see it either. And yes, they were over promotional. And I didn't follow the stock, and so I'm just going on secondhand information. But apparently, the previous management was not well respected, and the new guy in there that I talked to, and his geologist, the interim CEO Joe Campbell, he's been working that area. He knows the project, the geology. He didn't bullshit me at all. He just told me what he was thinking, what he was seeing. So there's a big improvement there in terms of who's running the company.
So you've given me another idea for a t-shirt and something about porphyries. Go big or go broke. Unfortunately, the second thing happens most of the times.
I like it.
Hopefully it's not going to happen in Kazakhstan, but you've never lived there. And I know you're speculating on a story in Kazakhstan right now. And this might be a good point to talk about, and I have exposure to Kazakhstan myself, so I'm being selfish here, but this might be a good point to talk about choosing that jurisdiction in a place where you want to go and speculate. Because you said you want to, you want to be speculating on a geology you're well familiar with, but then again, Kazakhstan. So Ontario, you're saying no, but Kazakhstan, you're saying yes. How come?
All right. Well, this, Joe Mazumdar, who writes Exploration Insights, he went to Kazakhstan and had a hard look at that, and liked what he saw, and so he bought it. The geology is well known. I mean, this is a classic porphyry copper district. These things you can see from the information, the drilling, et cetera. These are big size, big systems. So everything's right there. It doesn't bother me at all, it being in Kazakhstan per se. Because I think it's a place you can work. I've been there in the past looking, probably 25 years ago. But that's Joe went there and gave the thumbs up. So that's who we're relying on there.
What do you think personally, and I know you almost have to go here, but what do you think personally is going to be the next big place, the next big in the world jurisdiction, like the vicuña was. Let's say you'd picked up on vicuña 6-7 years ago or whatever.
Wow. It could be anywhere. It could be anywhere. You don't know. I think Bolivia is probably opening up.
Hmm.
Argentina's opening up. So those are two places to keep an eye on. And that's the politics has gotten better.
Well, but what about geology? What do you like? I mean, is Kazakhstan a potential contestant, or any other geology that you like?
Yeah, I don't think that's going to be a big deal, Kazakhstan. I mean, there's nice deposits there. The Tethyan Belt, that's always good, all the way into Turkey, although Turkey's getting tough to work in. The Andes are always good. We've got a multi-million ounce discovery in Nevada in an area that had been worked before. The silicon deposit that Anglo's got. That's a big surprise. So that's the area's heating up.
Yeah. Yeah. What's that shirt you're wearing? We're talking about shirts. Is that quartz veining going across it?
I hadn't thought about it that way, but yeah, this is
You
the
hadn't thought about it? Come on, I thought you were a geologist.
okay, this is the newfound gold structure.
How come? Is that a dig at newfound gold?
No, I mean that's what it looks like.
Cross-cutting structures and veins. I don't know anything about it. I know our time is up though, and I don't want to overstay my welcome. But thank you so much, Brent, for doing this. Anything else that you come here hoping to talk about that we failed to bring up?
No, that's fantastic. I really appreciate it. I urge your viewers to go to Joe's website, explorationinsights.com. There's lots of free information there. And again, he's a very competent, honest fella.
Thank you. I really appreciate your time, and thank you so much for doing this. Hopefully speak soon.
All right, cheers.
Thanks.
And thank you to everyone for listening and watching. This was an interesting conversation. Any and all questions for future interviews are, of course, welcome. Please post them in the comments. But I am still going to kind of repeat the warning that I said at the beginning, that everything combined with the warning that I gave you at the beginning is to say that you should treat this program as biased entertainment instead of unbiased journalism, because there will always be some type of bias in what everyone tells you online. They may own shares of the company, they may be a director, they may have been paid by the company, and so on and so forth. Now, this entertainment program specifically is intended only for experienced junior mining speculators, because mineral exploration, development, and mining is a very tough business. Losing money is the norm and should be the expectation, as this is a very complex sector, and the performance of individual companies typically depends on many different things, including geopolitics, macroeconomics, commodity prices, and many other moving particles that are typically outside of anybody's control, and no one can really proceed him, because unfortunately, and believe me, I have tried, and I might even keep trying, though I doubt I'll ever be successful. I just don't possess any superior knowledge about the potential direction of any stock or commodity price, and at least to my understanding, nobody out there does. So you should not rely on this program for directional advice or advice of any sorts, as this was a conversation that was general and impersonal in nature between a couple of individuals, none of whom are your licensed financial advisor, and none of whom can see the future. So no guarantees can be made about future events, and past performance is not a guarantee of future results. So please talk to a professional licensed investment advisor with a good long-term track record, as well as do more research before taking any decisions by visiting setterplus.com, where you'll find the official filings of the companies that might have been discussed in here today. And if you don't do that, you're highly likely to lose your money. There's a couple of documents that are absolutely obligatory reading for people interested in the space. And that is, of course, the MD&A, which is the Management Discussion and Analysis. And it's an official document that the company publishes on setterplus.ca. You want to look at the financial statements of any company and understand how and why and where they spend money. And you also want to look at the Management Information Circular, which is going to tell you how much money each insider of a company earns in total compensation, bonuses, and everything, and all the other incentives that they might have. It's also going to show you if there are any change of control fees and whatnot. It's a very important document. And then, of course, this is a technically focused business, so You also want to read the NI 43-101 technical disclosure. And again, if you don't understand it, consult with someone who does understand these things. Because if you don't do that, you are highly likely to lose your money. So yes, thank you so much for listening to this. And I'll leave you with one of my favorite Charlie Munger quotes, which was, if you don't understand it, don't do it.